Fibonacci now in this strategy is a very key tool we use in the strategy, because without Fibonacci lots of positions will not be taken. We won't even know the exact measurements, or won't even really know the exact point market is expected to reverse from. So now the whole picture of this, so let me just delete all this, like charts hygiene. So with Fibonacci, what we're simply doing, okay, before that, this is the Fibonacci I'm using. So if you want yours to be like this, here is the configuration. I turned on my trend line. My trend line is off, so I'm not like using this trend line thing. It's off. It's off because I can locate the points I placed it to, and the 2 points I can locate it with my eyes. For the zero, you can see zero is here, right? Zero is the percentage, or zero is the last point of the extension. You can use here is the configuration for my Fibonacci. The trend line is off, that's at 0 opacity. Zero is at 36 opacity. 0.61 is at 36 opacity. 0.27 is at 36 opacity. 0.786 is at 75 opacity, and this is blue. So if you want to make yours like this, you can make it like this. You can use a different color as well. So if you see me on my charts, if you see me on my plugins, and you see this kind of thing, just know that it is, my Fibonacci. Right now, what do we use the Fibonacci to do? We simply measure the starts swing high to the swing low of either a supply level or a demand level. Right now, let me give you an example. Let's just give you an example of price. Now, if this was a supply, already know how. This was a supply that was created, so already know how I got the supply. Daily level, plotting it from this week down to this week up. So now, if this was supply, so where is this? I know definitely I'm interested in this whole band. But if you notice something in this whole band is around, let's say 40 pips. It's around 40 pips exactly. Now this whole band is 40 pips. Markets could just tap into this area and fall down, or markets could tap into this area here and fall down. Now, one thing we don't know is future price action. We don't know future price action. We just have to react to those price actions. So the function of Fibonacci is measuring retracements, right? So now when we take the Fibonacci from the high to the low before they pull back to that area, we are going to be focused on taking trades from 0.618 and 0.86 region. This blue region, if you don't want to memorize that, just the blue region is where we are interested in. So if price comes back here, anything that makes price to come back here, we could likely take positions from these regions. Let me turn off my magnets. We could likely take up positions from this region or something like, and keep our stops just maybe below the Fibonacci, right? This is something, yes, a very clean position like this. So the Fibonacci gives us a very good entry, or gives us the exact place we should be expecting price to go reverse from, or continue from, right? The Fibonacci, it's just the measurement. You see, we're adding like 3 confluences to what? We're already having like 3 confluences to have to a directional bias. Now the first confluence is the downtrend, as you know. Second confluence is the body to body region. The third confluence is the supply area that was here, and the fourth confluence now is the Fibonacci. You see, this will really aid the results, and this will really improve the results. Let's give another example. Now I'm going to give an example of a trade. I'm going to give an example of a trade that has happened, past trade. I'm marking. So let me use this as an example. Okay, let me use this as an example. Before this before this price action here, let's assume we plotted on our daily time frame this body to body area. Plotted this on our body to body area. Then we have our daily areas like this, and now we are looking at taking short positions when price comes back to this region, right? The first time it comes back to this region, we're looking to take continuous shots. Now if you take our fib from this area, from the high to the low before the pullback, you can see that okay, price didn't really reach the 61.8 and 78.6 band. Price didn't reach this area. So for me, this could have been a missed position for me. You understand? That is the rule. That's the rule. Once it's not in this region, we just let the trade go. Because if you notice in your fib, there are other levels like 50, 61 and 61 AM, 61.8, 78.6. They are different. It's 8.6. Like there are different levels, but the best ones are the 0.618 and the 78.6 or 0.786 region, because that is a premium price. That is the best price. When you're looking to sell, you're looking to sell at a very expensive price, right? If you're looking to buy, you're looking to buy at a very cheap price. So that's just the ideology behind this. So this example didn't really play out well. Let me look for another example. Now let me for another example. Okay, this is good. But on the buy basis, let's say this level now was our demand. We're looking to buy, right? We're looking to buy, and what do? We plotted at our daily level, body to body area, then use our rectangle, plot out the demand. So what are we looking for? We're looking for price to come back to this region before we can see continuation to the upside. And now, where was the last area before the pullback? Guess it was here. This candle's close. Make sure you understand. I see what I'm doing. I drew my fib from the low to the high of the previous day before the move, which is this candle here, this one here. Let me do this again. Here is that low, that high there is where I drew it from the low to this high. Right now we have that demand area already created. We are looking to buy, we're looking to continue market, we're looking to continue buying. And where are we looking to continue buying? Immediately price was tapped into that 0.786 and 0.618 region, right? This region, that's where we're looking to buy, right? So now if we move to our 30 minutes time frame, and we can just have further confluence there for the buy, let's see that market really market really, or let's just say from here to here, this is better. From here, from this low that was created to this side, you can see that market tapped into this region, right? And we can see the blast through. Now, where can we take our trade opportunity from? We can take our trade opportunity from this region, keep our stop just maybe. If you want to go very like, if I want to like be very minimalistic with my risks, I can just keep my stops below that fib area, then have my targets above, then, or keep it below that whole band. Now we have a demand zone with also a fib level in that demand zone to really tell us where we should be taking our trade opportunity in that demand zone. This is like kind of a work done. This is kind of like making your work easier or making it more precise, right? When you draw a demand level, you don't know the exact price or the exact point that price market is going to reverse from, or you don't know the exact price or part of the demand that market is going to really trade from. So you have to use this measurement, and that's where the fib comes in place. So this is the first example I can give you. Let me give you another example on pound Aussie. Now pound Aussie, very interesting. Let me okay, very interesting right now. Good. Now we're going to do this in a simple way. After plotting out our demand, we could just see what market will do after the demand. Okay, chart hygiene. Let me delete this. I believe we are done with this. Let me delete this. So now on this chart now, let me just talk about this sale that happened. How could we have entered the sale? This was the first demand area that was created. First, we put our day level, then take out from low to the high, right? So how could we have entered this sell opportunity? If you notice, market started selling, but there was not a dip back to the dip back for the sale, but market dipped back inside and sold. So how could we have caught this? How could we have caught this 163 pips move, right? So when you take after plotting out the daily supply, we take our fib from the high of that supply to the low at which the pullback started. You understand? To the low at which the pullback started. Now, the blue zone is the area or the point of interest, or rather the area. The point of interest. Now you can see now price pulled back to two things, two places. Price pulled back to a supply region and also the fib region. Now you can see this is a 3-pin bar formation, and this is in 2-hour time frame. So I think, okay, let's just go lower to the 30 minutes time frame for just entries, right? Price like spiked into this area and started falling, right? So this is already a very good entry opportunity. You could just have your entry here. You can see our price is just really falling, and you can keep our stops just say above the swing high that was created here. Then you can have our target down. Sometimes I have targets as the 27 points, the 0.27 extension. You can have your target at very obvious support and resistance areas. Now look at that is a way we could have entered the short position, right? So it is a process. And what is the process? After plotting out your supply and demand levels on your daily time frame, then you will use our Fibonacci to measure that supply and demand areas to get the exact place we could want to take trade opportunities from. And these places are this place is the 0.618 and the 0.786 region, right? That is the rule, and that is the rule. Now okay, let's give another example on pound Aussie. On pound Aussie, here is another example on pound Aussie. This long opportunity here, this long opportunity that happened now. We plotted out our daily level, and now we want to measure the demand area. We take out from this our fib from the low to the high. You can see now what is market doing. Market is trading within that 0 and 78.6 region. You see, it's actually tapped into the demand area, but it's it's actually sitting on the 0.78 and 0.618 region, and now that's a very big confluence to what we have our long position, what's active. You can take long positions from this region, you can see. So that is just an example, and the way we use Fibonacci in this strategy. I make sure this Fib is something you use. It's very important. It is very important. And let's talk about one last thing. Let's give another example. This is gold. Now gold, we plotted out our daily supply, which was this whole area here, and market tapped into that area. So how do we join it? Join this trade, because this trade was given in the group. I took this trade. This trade was a very big banger for me. I took this trade. So how did I join this trade? Now after market had tapped into the supply, it came down. Now it created a liquidity grab. Now that liquidity grab that was created, I had to just take the measure of that liquidity grab to have my very good entry and target as well. So you can see here was target, here was the high. Yeah, exactly. So what did market do? Market came back to this region. We have our liquidity grab area, don't forget. We have our liquidity grab area and our Fibonacci. You can see market tapped into the Fibonacci. This is a retracement, and also tapped into the liquidity grab area, and giving us a very big confirmation for sales. So that's how I took this sell, the shorting opportunity here, and I left this trade about 100 or about 200 pips, because I took a lot of partials before this whole move to the downside. So this is how I took this whole trade, and this is how Fibonacci really aids in the analysis and precision of our price action. So you get your daily demand, your daily supply, then you measure the daily supply and demand, measure the 4-hour liquidity grab areas to have precise entries, right? Without the Fib, I could have never known that it's very good to have a sell opportunity, even if this was a liquidity grab, right? Only trading just based on liquidity grab won't be very sufficient, because sometimes you might just experience some minor losses and other things. So but having Fibonacci at your back gives you the extra confluence for attaining very good trades, right? Hope you guys really understand this. So